Good morning, everyone. I hope you're all well. It's Duncan here from Tradeify. Obviously, Nick and Celine have another day, so you have me for the day. So there's certainly no shortage of things to talk about this morning. We're coming off the back of a pretty big down day on Friday. We can dive into the cause, the outlook following that. So let me just say a few good mornings. Good morning, Leah. Good morning, Christy. Good morning, Amirez. Awesome 888, great name. Samantha, Trader Sue, I hope you're all having a good day. Lavana, I know you're missing Celine, back tomorrow. But unwritten, very nice. Yay, it's Duncan. Very nice way to start the day, thank you. But again, obviously, I know I bring a bit more of a serious tone to it, but I think a day like today and the start of the week is probably a really good time to just kind of have a bit of a dive into what's truly going on and driving the markets. I'll try and keep it light, keep it kind of low key on how I describe what's going on. But look, if we just look at this is the NASDAQ hourly chart. We can see that aggressive move that came on Friday. Now, obviously, there's a few major contributing factors to why things are trading heavy at the moment. And it kind of kicked off last Wednesday with Broadcom numbers. They came in, let's just pull that one up. They came in actually right. But you can see there last Wednesday, we saw that sharp move down. Duncan go long. Well, let's wait and see. When we come to the charts, we'll see if it's a long or a short day. But again, I've got a few thoughts. I'll certainly give you those. But yeah, as I was saying, Broadcom kind of started the tip downwards. This just came as its EPS was good. Its revenue, some people say it missed, some people say it was bang on. But more to the point, it wasn't bad. But what it failed to do was deliver the expectation that the markets wanted. It didn't revise up its target, which some of the other AI, semis, and tech companies had. And that kind of gave a bit of a jitters. And Broadcom has reached the size where it gets judged in the bracket of the NVIDIAs. So set up, that's old news. It's just a bit of context, mate. So it's fine. We'll go through that. We'll get to the new news in just a minute. But that's, as I say, that was the kind of the tipping point. But Friday's payrolls was definitely the biggest. And there's some negatives for the markets there, but there's a couple of positives in there. They're hidden, but let's find them. Let's see them. Right. Let's just have a look. So from a headline payrolls number, it was a big beat. Now, we not only did it beat, this is why payrolls is so hard to trade, because you're taking so many factors in. The non-farm payrolls came in significantly higher. The street was expecting 85,000, came in as 172. Not only that, for those of you who remember last month, the figure was 115, and that got revised up to 179. Even if we go back to March, I think there was a revision upwards of another 22,000, which took it over 200,000. So the most recent 3-month average is pretty good. Now, what this means for rates is, obviously, in order for the Fed to be cutting, they would have to be supporting the job market. What the job market isn't necessarily looking like it needs support, and for that reason, the probability of rates cuts got, I wouldn't say entirely taken off the table, but really significantly dented the chances of that, and more pushed towards the fact that we see rates higher for longer. Sadaf, right. This pullback needed around. Pullbacks are needed. You're right there. Pullbacks are needed. They're healthy. They're what we see in cycles. So for that reason, every so often we get a chance to buy on sale. This could well be that. Sadaf, look, no problem, mate. I'll go through it. in time, we do need a bit of context on it. So whether you want an economics lesson or not, it's no difference. But this is to explain through what we're looking at. We can only really understand what we're going to do next when we understand what's happened. Okay. Right. So as I was saying, there was the non-farm headline number was bad, but the things that are quite positive for me are the inflationary measures. Now, average hourly earnings, if we'd have seen this up, that really would have been, now you think you want people earning money, then they can afford inflation. But ultimately, the more money people have, the more it fuels inflation. So the fact that this didn't move up was quite positive. But nonetheless, let's finally jump to the charts. Nonetheless, the markets reacted quite aggressively. Now, what we tend to see in times like this, and I know this from sitting in banks, you see when we've been on such a bull run, stop losses start to grow, and they don't always grow at the rate. They're cascade. All stop losses don't go in the same place. Everyone puts theirs somewhere different. So once obviously we had a reason for the market to come down, and then suddenly we start triggering stops and moving, and that's why you see a move as aggressive as we had. I think the Nasdaq was down 4.68%, the S&P was around about 2.6, and the Dow gave some back. It was about 0.3 down on the day. So quite a significant pullback. But the question is, from here, where do we go back? Where do we go from here? Now, there has been a little bit of escalation in the Middle East over the weekend. So that is Israel bombed, I think it was central and western Iran. Iran retaliated. This isn't good for the truce. We're not making progress there. Okay, let's just take it down. We'll maybe just go in, have a look, see if there's any opportunities about. Now, when I start my week, I like to look at the longer term lines. Now, this is something I always advocate. When you go into things like start of the week, when you go into major volatility events, like payrolls on Friday, for example. Now, this is a great example of why you do that work. You go drop back, go out, go onto the 15, go to the hourly, because look at this. We had a couple of previous lows there. When we've got a market that's falling and falling and falling, it's always good to have just done a little bit of work first, just like I like to do at the start of the week. Look at whilst I may not be trading the longer term lines, just it's good to know where they are, because this allows you to, when the shit hits the fan like Friday when we were falling out, where could it stop? Now, it could stop around here. And that's pretty much not far off what it did. Do I know what caused the bullish pip near the open? Let's have a look. Let's just bring this in a little bit, which we were just about to do. Do I know what caused the bullish pip? Now, I think after we've... Actually, I'm going with 15 now. I want to go... Let's take it down to a 5. I think after we've seen such a aggressive move, so bear in mind, obviously we saw the very bearish move on Friday, but bear in mind the rest of the market's got to catch up. Now, the Asian markets, if we have a look, the Nikkei is looking at 4.15% down, Hang Seng 1.32. They're catching up. The Asian markets were closed when we got payrolls, so is it a surprise to see them red today? Absolutely not. In fact, if you have a look, let me just put it, I was looking at this about an hour ago. Look at this one. This is the South Korean Kospi. Look how aggressively it went 8% down there to bring the circuit breakers out and cut the market. But the Kospi is a prime example of a very AI heavy market, and therefore it kind of exaggerates the moves we see elsewhere. There we go. Right, okay. So in terms of what caused the bullish pip, again, it's such an illiquid session. Just a few buyers come in, and look, there will be buyers today. What we can call this is like just this as was it Sadaf or whatever his name was earlier said, we often see opportunities to buy after heavy sells, and that could well be what we start to see today. Now, we've kind of cleared out all the stops on the book as we come down. So do I ever look at doji candles? No, I don't. I'm Mr. Simple when it comes to technical analysis. Can you use the cost speed to trade indices and metals? Personally, I use it as a guide. We do actually, my fund, we do look at the South Korean stock market. There are some good opportunities to trade there. Indices on metals, in terms of indices, I use it. It's one of the first things I look at when I put my computer on, because I'm starting before Europe. I'm out here from 6:30 in the morning, so I use it as my gauge of how AI stocks could look. Obviously, I'm mindful of the fact the opening of that session is kind of they're catching up with whatever the US has done, but then towards the end of the session, you start to get a bit of a feel for how the markets might be looking as we come into our new day. So yeah, Nick and Celine back for another day. Back tomorrow. Okay, right, let's just have a look. So if we come down, we'll talk about the Middle East in a little bit. We'll talk about what's coming up for the week ahead. Monday mornings, it's a good time to start and look at what's coming up for the week, and just make yourself aware, drop a few notes on what's coming out on which particular days. But for me, obviously, the big thing on Friday is the fact that the reason we're getting these moves is because the fact that the market, let's just price it out. So this is the CME Fed Watch tool. So this tells us what the market thinks we could be seeing in terms of rates moving forward. So I've done this, the first one that comes up is the 17th of June. So this is the next Fed meeting, which is going to be interesting. Kevin Walsh's first meeting at the Fed. Now, if we go out to year end, following Friday, I think it's something like we had it was a 45% chance that we could see rates higher by December. Now we've got 41% of people think we'll be 25 base. This is where we are currently. We've got 41% thinking we'll be 25 basis points higher. We've got 26%, so over 75% of people think that by the end of this year rates will be higher, with 26% of them thinking we'll have had 2 hikes. Now, for me personally, I don't share this opinion. I don't think we're going at that rate that quickly. I think the Fed have to be very careful with what they do. I think we've got a new Fed member. We heard from Trump yesterday saying that rate hikes would be stupid and he would cut rates. Now, don't get me wrong, I don't believe that is right. But what I don't think is we see the Fed act and move quickly. I don't think we move, we're going to be going anywhere quickly, because what the Fed don't want to do is start hiking, and that looked like a mistake. So for that reason, that kind of lends me towards, I'm not quite saying, it's going up today, but I think this is a correction. It could continue for a day or so, perhaps, but I think we'll get through this. But of course, there is meaningful data this week which comes in the shape of CPI inflation, and again we'll have a bit of a deeper dive into that in a moment. But again, a big inflation print would scupper this and put more pressure on the Fed. So there's a lot to be going on with this week. It's not. It's going to be another interesting week, which brings me to. I thought we'd give it 10-15 minutes into it, and then we'd come to the Grand Cup, because let's have a look at what happened on Friday. Now, I'm I'm in London. Well, I'm not in London, but I'm just outside London. So I'm in the UK time zone. I'm nearly 50, so I go to bed early. It's part and parcel with the fact I get up early. But I woke up on Saturday morning and I was like, oh, I'll check to see how the guys got on the Grand Cup. Obviously, I knew it was going to be a brutal day, a really tough day for traders. But one of the first things I'd looked on was the Tradeify Slack. And there was a post by Spudnik, in which it was, I hope someone shows it. I hope perhaps one of those guys will show it today, because I thought it was brilliant. It was basically a post from him going, guys, blown up my account. Really, right. It was just really well written. Nice post. Tough day. Really, obviously I've lost. I'll announce, blah, blah, blah. Really appreciate everyone's support. Love doing this competition. And then as I trailed through it, there was a sudden realization that obviously he's under 23,000. He's just thought done and dusted. But look at this. His opponent got absolutely dusted too. And he won by being the least bad. So, but at the end of the day, a win's a win. Now, I work for a fund. When times are good, you're being judged on how good you are. When times are bad, you're being judged on being less bad than the rest. And being in tough times, being less bad than the rest makes you look pretty damn good. So it's incredible to see that he won. So, but look at this. Not only was it the well, look, let's be honest. It's a pretty poor heat. Both naturally must have been sitting heavily long into a market that wasn't respecting longs, but it turned out to be the closest heat. But look at this, HSKD not only lost all the money, but managed to lose a little bit more than zero. Needless to say, I'm sure that was a painful day. And I mean, for all these guys, what a difficult day to be trading this. TDEV down at 18,000. Afro Miyagi, I've got to say, hats off. I will say, I would suspect Afro Miyagi took very few. Well, actually, saying that, it made nearly $4,400. So again, huge amount of respect for that. So Afro Miyagi deservedly got his place. I think Afro Miyagi is up against Nick now. Down here, Dr. Doolittle, 41,000. That's on such a heavy one-directional day. Now, don't get me wrong. Apart from Afro Miyagi, I don't think anyone really took a short. But look, it was a really tough trading day, and all these guys, these 8 guys here, all deserve a huge amount. This is day 8. They have fought on for 8 days and done brilliantly well to get where they've got. They're all earning money. Let's just catch up on the chat. Right, markets were overbought of late. Yeah, markets were overbought of late. Yeah, they definitely were, and they do need these corrections every now and then. Bigger drop in the near future. The one thing I would say is, if we didn't have inflation, I'd say, like I said just 4 or 5 minutes ago, I'm not saying this will be the bottom here, but at some point in the near term, I think we start to push back and turn back around. People, like I said before, when we were up at the highs just last Tuesday, there would have been people going, "Oh, I wish I was in." And suddenly you've been presented for some of the Nasdaq stocks. Suddenly you're 5-6% better off. You're 5-6% cheaper to be getting in, and that will always attract people back to the market. When we start to move back up, those who have been stopped on the way down suddenly start to think it. The one caveat I've got is CPI on Wednesday. If that number doesn't come in too hot, then I think we would see some buying. But of course, with the backdrop of everything that's gone, how could we expect inflation? Another thing I was reading, I can't remember where I read it, but I was reading it yesterday. One thing to consider when we look at this number here, I think something like 70% of not 70%, 70,000 of these jobs were generated in hospitality. Okay, now why would we be creating a huge new amount of jobs in hospitality? We've got a World Cup starting starting this week, actually, I think it is. Of course, America's about to host the world to play football. Why wouldn't there be a huge amount of new jobs being created? So it's just little things like this you have to look into, and you have to try and see past the obvious headline number and guess why it's there. Do I think in another month's time, or let's just say 2 months' time, to allow it to kind of filter out, we'll still be maintaining those jobs? These will be transitory jobs. So again, as another factor, so we can't run away with headline numbers. We have to sit back and think, okay, what makes up that number? What could be corrected? What could be an anomaly within that number? And I think that element is important, because a big event like a World Cup, we were filling out stadiums. I think it was like another one. It was obviously we had hospitality, we had healthcare as well. Think about it. I mean, there's going to have to be resources put to all of these stadiums, all of these fan parks, all of the town centres who are going to be dealing with huge volumes of people. So again, I'm just giving you an idea of how you have to think when you're looking at. I'm not saying that's purely the reason for it, but we have to consider inflation is up. We're led to believe companies are using low high, low fire. Why does it all change so quickly? Again, if we can just strip out an element of it, it can be important. And that leads me to the thought that we could potentially see this up a little bit. So I've done a bit of a recap on Friday. We'll come to today in a moment, because in the Grand Cup, it's already off and running, and there's movement already. There's some good things. Right. So let's have a look and see what's going on. Before we do that, let's just have a quick look at oil, because with what's been going on in the Middle East over the weekend, oil has gapped that 3 or 4% higher, nearly 5% higher. So again, that's just a fact of what's going on. We're not having any progress in the negotiation talks. Talks over the weekend, Iran are not going to speak to Trump. Trump jawboning about the fact Iran won't get their money and won't release their money, won't be allowed to keep their uranium. But what we have to bear in mind is things often get worse before they get better. Sometimes sporadic fighting can force them to the table quickly to kind of renegotiate before this kind of escalates out of hand. So potentially, if we see anything along that lines, I think Trump will be active this afternoon. Oh, sorry, I said this afternoon. Well, a lot of you will be in the Euro time zone, but I think we'll certainly be hearing from Trump today on what he's thinking over this weekend. Yeah, I mean, look, we're at 100 days of this war now. I think we tipped over that over the weekend, and that when you tip over things like 100 days, people look at what's been achieved. What was the point? And are we close to getting there? I think the answers to those three questions are all quite negative at the moment. And for that reason, it could force Iran back to the table a little bit. Then that could then hopefully speed up the negotiation process, because time, money, resource, the implications of what it's doing to the market. Now, obviously, the stock market's not particularly troubled by it. Obviously, we had this crappy day Friday, but we know why. There's a good reason. But if we look at the yields to the 10-year, it's back pushing towards 4.6%. Again, this is not good for the US, not good for Trump. This is the high level of borrowing in the US means that when these yields push higher, it's very damning. Again, I think the 30-year back above 5% from a yield perspective as well. So again, something to consider. Now let's have a bit of a dive into the charts. I appreciate I tend to talk a bit more, so sorry about that. But I think this is all really necessary. It's a good way to start the week by just immersing in what's gone on, why, what's coming up, how could it affect the markets, that sort of thing. So for me, what's this? The S&P. Now, I'd just be noting, let's just tidy up whatever this is, get rid of all last week's lines before I start the new week. Now, let's just start by looking at the S&P. I'm going to start out in an hour. Similarly to the NASDAQ, we've got this good line of support here, which goes back a period of time. So you can see, look at that. I said about before we go into payrolls and things, heavy data, look at things that are far away. This would have felt miles away when we were up here on Friday, but it is relevant. Plot it up so when you get there, you're not surprised. But today I'll be keeping an eye on this. Now, look, my bias today is from the longer side. I'm much happier to be a seller than a buyer. I'm a pessimist by nature. You probably hear about it when I talk about the war and stuff like that. But nonetheless, from the reading I've done over the weekend, from looking into the potential causes of the higher payroll number, from thinking about what I think the Fed are going to do versus what everyone else thinks the Fed's going to do, I'm not quite on the same page, and I think we could see potential for a bounce, but I want that to be technically justified. So this is out on the hourly. So if we're looking at trades we may take, I'd love to get some trades in. They'll just be theoretical trades because I work for a fund and I'm not allowed to tell you what I'm doing, which is not ideal, I know, but when looking at data, should you consider short-term aspects in rotation? Yeah, absolutely. All aspects, be it short-term, long-term, because I'm trading some trades I do in and out in a day. Some trades I do, I'm holding for 3 to 6 months. So I'm continually always looking at. I can be short of on a day. I can be short of something I'm holding for the next. I intend on holding for the next 3 months. It's just an opportunity. Okay, now. Let's just have a look at potential short-term opportunities. Now, what I don't want to be doing is forcing trades. Let's just have a look across here. This isn't great, if I'm honest. Again, that's not great. Let's just delete that off. Get rid of that. Okay, now, whilst my bias may be long, if I get a technical setup for a short, I'll certainly do that. Now, let's just have a look around. Where else are we? I'm just trying to find. Again, if we're going super short term, this is okay. Again, I'm not doing anything fancy. Support, resistance, trend line breaks. That's it. That is literally it. In terms of, I've said I have a bias to the upside, so I'm favoring finding opportunities that can help me back that up. So again, let me just extend that a little bit. What might I be looking for? So see, we've got multiple touches. That's not quite a touch, but if we break up through this line here, then a way I could potentially shape a trade would be for a long. So at this moment in time, I'm not in anything. I wouldn't be in anything. I'm not seeing anything I would necessarily trade. Again, I would potentially put an entry here. Is it unfeasible to be looking for a higher level? Again, now just to give you an idea. So let me just talk through my thought process here. Oh, what am I doing? There we go. Right. Okay, so I could have an entry to buy through this line. Right. Can you elaborate on what you consider an A+ setup? You'd seriously capitalize on training and advising your fund trading strategies. Okay. No, Nick and Celine have not been fired. They'll be back with you tomorrow. But they've just had a little extended holiday, but they will both be back ready to go. They have not been fired for their Grand Cup performance. I can, it's an official statement. They are still with the company. They will be back with you tomorrow. And I think, in fact, tomorrow, I think everything is pretty much back to complete normal. Obviously, there was a offsite celebrating the 1 year of TTTV. And like I say, last week's schedule was a little bit disrupted. Myself, and sorry, I can't remember the lady's name, the other lady's name that was doing the London session. But everything goes back to complete normality tomorrow. Nick has not been fired. Right. Okay. So someone was saying, what would I now? Just to give you an idea. So can't dispute. I've got my trend line here. My trend line's above a previous high. Now, even if this comes down, I will not put this entry below this previous high. Why would I want to get in when there's a previous high just that close to it? So for me, this would be a good setup. So I would buy through here. My stop loss, again, it depends on what I'm looking for out of this move. In fact, I'd probably be more inclined to have my stop below the low of that move, and potentially, because bear in mind, is it greedy to be looking for 400 points on the NQ after we've had a massive pullback? It's not really. So again, what you can see here is I can put my stop entry. It's on a good line above a previous high. Looking for as I say, about 400 points. Claudia, sorry, I beg your pardon. I forgot Claudia's name there. Someone just reminded me on the chat. Okay, so there we go. So my stop loss is in a good place. It's below a previous low. I like that. I've got a line of support that gives me my first support point against as a stop. So when I enter into the trade, I'm comfortable. I know it's all right. I've got a good trend. It's not amazing. That's really short term, that line. But if we put it below here, we've got it on the most recent low. I've got my risk reward ratio of 4.7 to 1, which I really like. So we'll just leave this one up, see how this one plays out. And now, obviously, there is the potential case for taking a short here, but that doesn't sit with my bias. I'd rather be long than short. So let's just keep an eye on that. Right, okay. Entry and stop loss. So the entry would be here at 29,176. Stop loss down here, 28,962. Jesse James, very nice, thanks. Cool. Right, so this is just an idea of an entry that are a typical. For me, this is a typical setup. I have to have a technical line to get in. I look for a secondary factor, and that is breaking above this high here, getting in. Now, one thing we'll see is if the market doesn't break through, then it kind of changes my line. So we'll see, and with short-term entries like this, you have to be on top of them, because a lot can change when the market doesn't break through. And if we gap down to here, it could make my trade setup irrelevant. So it's not just with things like these, they're not a case of just put them in, walk away for 3 hours, because the entry point, the stop loss point, all of these factors could change quite quickly. So for these ones, I have to be watching them. If I'm not watching them, I cancel them, I walk away. Bearish is the most probable move. I'm not sure if that, I'm not saying that's wrong. it could, and that's why I'm setting up traps to catch it if it goes up. So can you elaborate on the difference in trading with personal accounts, for example, versus your fund trading? Now, I'm actually not allowed. When you work for a fund or a bank, you're not allowed to trade personal money. So it's actually illegal to do that. So I'm pretty sure it's the same in the States. Again, when you sign up, when you take their wages, you are theirs, and you are not supposed to do it anywhere else. I'd imagine that is exactly the same in the States. So I'm not allowed to trade my own money. I'm only allowed to trade the fund's money, which is why I'm not allowed to show anyone what I'm doing, because technically everything I do, everything I say is owned by the company I work for. And that's why when I do these are theoretical trades that I might do. Cool. I'm not connected to any firm on TradingView. No, we're purely private. We're invested in by professional investors only. Yeah, exactly. Market Merrimaker. Exactly. Even if you work in the risk department, if you work in accounts, again, you're privy to information that your fund could be just about to buy a huge amount of said stock. What would you do in your private? You'd go out and buy it just before. And that's why you're not allowed to do anything like it. And every year we have to sign a bit of paper saying, I do not have any personal trading accounts. I do not trade personally anywhere other than the company. And you sign it. And then if you're shown to be doing it, as I say, you're certainly losing your job, potentially getting criminal charges against you as well. Defining slavery, yeah. Don't get me wrong, they pay you all right, so you're not hard done by. You do okay. You've got that consistency. You also get a nice pension out of it too. So, right, let's just have a look around. Have a look at the Dow, because obviously that can trade a little bit different to some of the others. It's certainly at the start of the week, we start by going back out onto the hourly and just seeing, because what we don't want to do is miss something. When we hang around on the 1 and the 15, I thought that was going to be bang on perfect, but arguably potentially just edging through there. We've also got a lot of traffic around here. This is a weird line. I don't know what made me start doing this type of line, but I sometimes like this type of thing, because that's just a little blip on it. But where we've respected, broken through, pulled back, held, you could argue that's a hold. That's not bad. It's certainly better than this line. Like I say, it's not perfect, but perhaps gives some grounds for a long on the line, which is not something I do often. I'm more of a, if we break, I'm in. But if we're consolidating above a line and it's a good line, there is a potential. The one thing that I don't quite like, there's a potential for this kind of setup. So perhaps buying in where it is now, putting the stop loss just above these lows. Obviously my line is here, but if we've got lows nearby, I want to give myself just that little bit more. Because look, think about it. I was going to say this is the obvious place to have a stop loss. I appreciate this line isn't really clear and obvious. This is a type of line that I really like. I don't know if anyone else. Yeah. But yeah, again, target just above the high. I've still got my 3.44. So we have a potential trade there. I am not calling that an A+ setup though. I'm really not. It's a setup, and it's not terrible, but I most certainly preferred the cleanness of this setup on the Nasdaq. So this is cleaner. The lines are better, but this one certainly isn't bad. Oh, I was charting. For God's sake, I didn't realize I was charting on the hourly there. But anyway, again, it's potential. So let's just take this. We'll go down to. Let's just do it in order. I tend to go 1 hour, 15. Yeah, it's just the same setup there with the potential buying ahead of the line. Like I say, that's not necessarily always my favorite thing, but we are consolidating. It's not like we're just trying to catch a falling knife and just trying to stick a hand out and hold it. We have consolidated, and if we can't break lower, then we can trade higher. Let's just, again, I'll just put the analysis back on here. So stop above, stop just fractionally below those lows, targeting back to the highs. Again, my minimum risk reward is 3 to 1. That fits. So there is potential for this. Like I say, it's not my A+ trade, but this is an okay setup for trying to catch something there. So we've done the Nasdaq, we've done the Dow. I think we did the ES. It wasn't. Oh, sorry, we didn't go down onto. Let's go down to 1 minute on Dow. Not a lot's changed. Just sort of perking up. But yeah, I feel. I don't know why that's moved across. I feel justified that this setup could be all right, especially. It's given accommodation, and this is the hardest part. The charting when you're trading trendline breaks and support is the easiest part. Finding the right place for a stop loss. Yeah, finding the right place for a stop loss is the tricky part, because everyone's looking at these lines. Everyone and that's when you can sometimes see them just get triggered in, and then we reverse. Cool. Yep. So I am talking market Mario Maker. I'm talking my book here, because I would favor the upside after the moves that we've seen. Obviously Asia traded so heavy, but it had to trade heavy because it was kind of catching up on last week. Okay, other things to consider. Now, obviously gold traded heavy on Friday because gold is trading as an interest rate play. Let me just delete off the old shit. Gold is gone from trading as a risk play, because typically if we went back a year and we'd had kind of bombing between Israel and Iran, then the first thing you'd be saying is gold's going to be up. But at this moment in time, it's not, because obviously if rates are higher for longer, with interest rates staying higher, it means if you put money in the bank, you're getting more back for it. Now, gold, when rates are higher, gold trades weaker. Now, obviously, payrolls on Friday nudged towards the fact that rates would stay higher for longer, and that came at the detriment to gold. So let's just have a look. Go out on the hourly. I know Claudia, I quickly popped in. Some of her gold analysis was really good last week. I trade a lot of gold as well. So it's something I'm always looking at. Let's just have a look here. This is on an hourly though, guys. So this is a long way off. So I just put these lines on. Just because I put them on doesn't mean I'm definitely going to trade on them. But at the start of the week, I like them to be there, because suddenly when they pop into my screen on a 1 minute, 5 minute, 15 minute chart, I'm like, oh my God, this is one of my big hourly lines is now come into play. So I put them on, leave them there. On the 15, obviously you can see the line there, but it's proven miles away. So to think that this might necessarily come into play would need something fairly seismic to happen. To get us up there today, I think we need a major breakthrough in the Middle East. But now let's take it down onto a 5 and then a 1 minute. So on the 5 minute, again, not a lot jumping out at me. Take it down onto a 1 minute and see if there's anything there. Now, arguably, we've got a line coming up here, but I don't like that, because why am I not starting it there? I'm trying to force a line. I'm trying to find something that isn't necessarily there. So let's just delete that off, because that's a nonsense, really. Theoretical, sorry, someone's just asking where my theoretical take profit. I'm glad to say you're using theoretical. Theoretical take profit was around about 31.59, so around about 31.60. Again, it's entirely plausible move for in a day. Obviously, it's a big move, but well, look at the scale of what we got. 30-minute showing a 3-wave sweep of the low, and that's gold you're talking about there. So let's just jump back to gold. Have a look at the 30-minute. Yeah, it is. Gold is trading heavy at this moment in time. I'm not particularly axed on a short-term play in gold, and I trade it a lot, but it's obviously before I came on, it's something I'm looking at for my own trades. And when I was looking around, there's not a great deal jumping out at me in gold. Even when we take it down onto the 1 minute, I'm just not seeing anything that's really jumping out at me. Market Maker Mario, killer day Friday. Caught a lot of the move. Excellent. So few people did. Bitcoin, let's have a look at that. I am not a huge trader of crypto. In fact, I think I said it last week. I was enormously snobby about crypto for at least a decade. And as institutional traders are, or certainly were, now I pay a little bit more attention to it. I'm just kind of working it out in my head. So what I'm doing with it at the moment, I don't trade it. Well, in fact, I'm not allowed to trade it, even if I wanted to. Again, when you're trading large client money, you've got to put it somewhere where it's safe, and somewhere where a market that, look, my clients aren't looking for like massive amount. If we're 20% up on the year, that's okay. We tend to eke out a bit more than that, but what we can't do is put money into something that's flying around 10 or 15% in a day, because yeah, we can make money, but we're also that's not our money, it's the client's money. And again, we promise to them that we will, 1, make money, 2, protect their money with our lives. And for me, at this stage, crypto's not there yet, but I'm now open to the fact that it can and it will. And what I'm doing now is I'm following it visually. So when we see a big move, I'm now going back to crypto. Okay, because I could tell you how the dollar, gold, oil, I can tell you how all of these, if you give me the data that comes out, I can have a pretty good idea on how the market would react to that. I didn't have that knowledge for crypto, and that's what I'm trying to expand upon, trying to make myself aware of it, because should we get to the pace where it becomes more credibly investable, I'll have a greater understanding. So that's the process I'm going through with it now. Right, so let's just, I don't know why I'm looking at Bitcoin on a 1 minute. Let's just take it out into the hour. But look, yeah, that has been trading very, very heavy. I can tell you my brother-in-law is not going to be very happy at these levels, because he's long and he's not long in a good place. So, but this is the thing, that he's a painter by trade, and he doesn't read or understand anything that happens in it. And it's again, if you're going to invest in something, you have to really deeply understand what you're doing, and more importantly, deeply understand the dangers. Right, have I done ES? I think we did, but we'll go back and recircle on that one in a second. Tradeify Wealth Chart Rhythmics, which one do I prefer and why? I don't use any of these. Lisda 5/8. I use Bloomberg. Again, it's just institutionally, it's what I've used for like 30 years now. So obviously I'm using TradingView to chart here, because I'm not allowed to use my company charting package. But Market Mario, I just buy Bitcoin not to trade it. Yeah, look, there's a guy, a good friend of mine, actually, very good trader, really good economist, amazing chartist. He's bought some, and he said he's just bought it, and he said he's put it under his pillow, theoretically put it under his pillow, and just said, look, I've bought it. I think he got in about 60,000 or something like that before we went up, and he said he's just put it there, and if it explodes, it explodes. If it collapses, he'd written the money off, but he's got it there just so that he doesn't, if it does become something bigger than it is now, that he's got something in it. And I think that's a good one. Oh, right. Let's have a look. Someone's saying broke resistance. So I take it we're talking in Q. We're on an hour. Right, okay. So I am now in. We've broken through my trend line. Yeah, broken through the trend line. Let's just extend that out a little bit. Broken through the trend line, broken through the previous high. So that would be enough to take me in. So let's just monitor how this one goes. Hopefully it pushes on, because that will give me a chance to show how I in-trade manage. Because obviously when you're looking for such great rewards versus such limited risk, you have to be quite on top of your in-trade management. So we'll just keep an eye on that. But yeah, again, Nick, be very careful with NQ, of course. Was I in fund management in the 2008 crash? I wasn't in fund management then, but I was. I worked for a bank, so very, very interesting times. So again, some real volatility. Obviously, I've been trading since like 97, I think it is. No, 96. Sorry. So I've come through, I've traded through some of the big events, and 2008 was very, very volatile. I mean, just to give you an idea, in 2008, I went from trading, sitting at a bank, and at that time I was a currency trader. I ran proprietary trading for interest rate futures and currencies, but I was predominantly trading currencies at that time. And I went from trading, I would say my like base level entry position was around about 5 million, typically between 5 and 10. That would be what, like, just my standard position size. In the financial crisis, that got reduced by 10 times because volatility was so aggressive that if you had a bigger amount, and don't get me wrong, I'm not showing off 5 to 10 million as a position when you work for a bank. It's not exactly that aggressive. It sounds arrogant to say that, but it's not. It's like, just typically traders hold positions of size, that size or bigger. But yeah, such was the volatility. I was trading a lot of yen, sterling yen, dollars, euros, but I traded a lot of yen. I like the volatility there. But we went from doing, like, the market moving like on an average, say 60, 70 points in a day, to the market moving 600 to 700 points in a day. So of course I had to pull, like, if you had a big amount in, you'd last 2 seconds. And the other problem what you had was when you wanted to get out of it, the liquidity wasn't necessarily there to allow you to get just out of it like that. So you have a few days where you tentatively try and still run your big positions, and then you go, no. And I was the boss. I had to turn around to the guys and go, look, if you were running a position of 5 million, I only want you having 500,000 today. And we could still make, this is the thing, even by reducing our position size by 10 times, that didn't stop the possibility of us making the same amount of money because the volatility was there. What it did do was stop us getting chopped up in the shit. And that's what happens when you get markets like that. It can really be volatile, and again, you can have the right idea, but suddenly it's done 75 points lower, a nanosecond it's 100 points higher. So you really, and this is something you have to do, guys, when it gets volatile, like Friday, huge volatility, you can bring your position sizes down and still make a lot of money. So when I got my 7 and 63, you were trading. I don't know what that means. Sorry, I'm not quite getting the 7 and 63. Excuse me if I'm being thick, but all right. Although I'm looking for a long, that last moment move is part of the first wave up. Good morning, MMQs. Cool. Right, I think we've reached the point where we should have a look at the Grand Cup. Now, obviously, for those of you who just joined, big news was, look, I want all these guys to win. I want Nick to do really well. Really good guy. Puts everything into his trade. You're going to see some fast potato action today when he's trying to get through this competition. But the one thing I will say, the best trader on Friday was Afro Miyagi. 54,000 up on a day like Friday when you see everyone else getting hurt. Afro Miyagi was the top performer. Euro won the second top performer. Yeah, sorry. I beg your pardon. Should have guessed that, Market Mario. That's when you go. So I didn't. Do you know what? I'm so old. I didn't even. We don't have in the UK. You used to have to sit your FTA exams, but when I started trading, they didn't do it. And then about 15 years after I started, they now made it so that you have to do your exams. And I got what's called being grandfathered in when they said, look, you have to do your exams, but if you've been trading less than over 10 years, you can't then make someone who's been living the life for 10 years suddenly go and do an exam to qualify to do what they do and have been doing. So I kind of got grandfathered in on that. You in the States have the exams to do. I'm glad I didn't have to do them. I'm rubbish at doing exams. So in fact, this is the thing, guys. Like my education qualifications are crap. But I worked at a time where they gave young people who were working well in the back office, who wanted to get into the trading room, it showed brightness. They got the opportunities. These days, it's far more about what degree you've got and where you've got it. Yeah, sorry, did I say up? I didn't mean up. So 4,000, yeah, obviously Afro Miyagi, 4,000 up. Yep, sorry, I might have said the wrong words, but I meant the right thing. And obviously all these guys are down significantly, 27,000 down. But as I was saying, so let's have a look at where we stand today, because obviously we've kicked off. Spud is up against Afro Miyagi, and he is not mucking around. Look at that. That's an amazing start to the day. So Spud's probably still asleep now, but he's going to have to wake up. The one thing I would say, the fact his balance is at 50,000 would lend me to think that he doesn't, or certainly at the time of the last revaluation, he didn't have a position on. But that doesn't mean to say that's where he is now, because what you got to bear in mind, this shows closed P&L. So not only is Afro Miyagi got nearly 6,000, he's banked nearly 6,000. Of course, we don't know where he is now. We never do. It's the beauty of the competition. Both of these guys, Euro One and Dr. Doolittle, have been trading. Nick, this looks like, so obviously he's losing at the moment, but the one thing is £6 a lot. If we look back over the last 2 weeks, if you make £6, you're more than likely gonna pull away with it. So Nick has a hell of a lot of work to do, but he's got a full trading day ahead of him. Afro Miyagi's got to hold on to that. I'd imagine they'll perhaps be a little bit defensive now, having got off to such a good start. But it bodes well. There's a lot of action going on. So, yeah, MNQs, again, best loser wins. I said it right at the start of this. Obviously, at the fund I work at, we aim to be the best. We aim to have the best returns. But when the market turns to shit and everyone's losing money, again, another thing that can look good is losing the least, and showing that you can deal with downturns without it seriously hurting your client's money. That brings big investment when you can show that. It's not just about the making money, it's about how you react and how you perform versus the rest of the street when the markets are going down. But yeah, we've got a big day ahead of us in here, so everyone will be keeping an eye. I'm cheering on Nick. I would like someone other than Tradeify to win it, but I want Nick to go all the way. But I certainly wouldn't be disappointed if somebody else outside. And as I've said before, all these guys, even everyone who was in last Thursday to get where they've got is excellent trading. To be as good and as consistent and doing just enough to get through for such a long time now. Can I go through MNQ trade? Why does you take profit where it is? Do you take partials? I know in previous live you said you rarely reach take profit and usually try to stop. Natalie, absolutely. Some good points and well remembered. That is exactly correct. So why is my target where my target is? So look, we've got these highs here. Does it seem unreasonable? Is it unthinkable that we could do this? Don't get me wrong, it's a big ask, but we're at Monday. Again, my target looks fairly aggressive. It can probably be a lot less in real terms. It can be, to think that we recapture that all today, again, it's probably a bit of a reach, but I do think we can certainly get up. And one thing I will be doing is trailing my stop loss. Now, what I mean by that is if we start to push on, so if we get through this next high, then, or perhaps through these, I think perhaps this may be my first kind of call to action. If we break through these levels where we've sort of tried, failed, come down. Now, if we get through here, then I would certainly be bringing my stop loss up. Now, obviously, we've got to think we're likely to see some trending coming up this way. So I'll be looking for where I'm going to trail it to at this moment in time. I don't know. It will be in and around break even, but it won't be just break even for break even's sake. I'm always looking for there to be a technical reason. Now, if the market does trend up, hopefully it follows this line. And my ideal is that I can use this line at a higher place to just be putting my stop loss behind it, because I want to be using these previous highs. Again, the first trail could be just below this line here, but it's just a matter of seeing how it goes. Now, as I say, I know my target for this is quite aggressive, but again, let's just look. If I get halfway towards that, I'm still stealing a 3-to-1. I'm still getting a minimum there. Cool. Yeah, so Trader Gold managed to use, look, I know people use fancier things. I know, again, there can be more thought that goes into the fancier stuff, but for me, the simple stuff can work. And I'm not saying it's better than the fancy stuff. It just, for me, and the way I think and the way I do things, it suits me better. Don't discard the simple in thinking that if I do it in a fancier, more thoughtful way, more technical way, that has to be better, because that's not necessarily so. It can be just about keeping it relatively simple. Cool. Right, another key thing that we all need to be doing on Monday is just having a look at the week ahead. So let's just have a quick look through. So we've talked about the contributing factors, payrolls, Broadcom, obviously developments in the Middle East over the weekend. But let's have a look at what's coming up this week. I think that's really important. Right. Okay, so for those of you not familiar with it, I can't imagine there's many of you, but again, for those of you who are not familiar, this is Forex Factory. It's okay. As I say, I use Bloomberg, but this is equally as good as it, to be honest with you. The only thing that's different between Bloomberg and this is the speed at which the data comes. It comes through quicker on Bloomberg than it does on a platform like this. And even if it's a nanosecond, you'll be amazed how much a bank and a fund will pay to get it a nanosecond faster, especially if you've got an algo or something like that. There's like banks and funds have opened offices and put their servers near to points where data is collected just to get a nanosecond quicker on the data release. It's incredible. But look, from an cat just trying to come onto my roof. Right. that's a really bad thing, because I don't have a cat, but I have 2 dogs, and so we're perhaps going to hear them very soon. Right. So today, from an economic data standpoint, not a great deal of stuff. So the point of what I'm trying to do through is, obviously for a day, so today, Monday, we need to be aware of what's coming up. Basically, nothing of real any note in any time zone. There is nothing coming out today. Tuesday starts to get a little bit more, just US trade balance, existing home sales, but look, it's yellow. They do it on a 3-tier system. Yellow means low level, orange a little bit more interesting, red proper data that is going to move and affect the market. Everyone is led to believe pro traders use order flow and DIM. Well, look, I'll just be honest, I don't use them. I've not heard of people using them, but of course that's relevant to the places where I am. But again, we just run everything through Bloomberg and Capital IQ. Again, these we use them. Yep, no, absolutely, Navid made it. Okay, so what we're looking when we're doing this on a Monday, we're looking out for the week and going, right, when we're getting into positions, what are we bearing in mind? Why do I care what comes out in 6 hours time? Because it affects me. Now, if I'm taking this NASDAQ position and I know that in 3 hours time, we've got major data, I'm talking like inflation, employment. Again, the question I have to ask myself, if I'm positioning myself ahead of it with a time scale to hold it through it, then when that data comes out, if I don't have a strong view on what the data is going to do, I'm gambling, and I'm not a gambler. I'm a trader. I'm a thoughtful trader. So my point of doing this, I write down on a bit of just literally a Post-it note and go like different times where I have to be paying attention. So obviously I'm in the UK, but I have this set up for States time. So this is 1:30 my time, 1:30 p.m. my time. So CPI is going to be big. It's going to be important. It is going to influence the market. Look at this. We're expecting core to come up 0.5, 2.9. Typical CPI, actually expecting a month-on-month drop there, but year on year, that's not insignificant. 10% higher than well, in and around 10% higher. That's not insignificant. I think the market will be looking more at core, because core strips out food and energy. Now, obviously, energy, to think that we're not going to see inflationary pressures from energy would be mad. Core tries to strip that out. And if core looks bad, if core significantly beats these prices, then we would need to consider that the fact that inflation isn't just this transitory problem created by the Middle East. So for me, on Wednesday, when we get these numbers, if these two numbers come in hotter than what's already expected to be a beat on last month, then that's when inflation would rear its ugly, real inflation concerns would rear its ugly head again, and that would be heavy to stocks. Okay. Again, Bank of Canada comes Wednesday. For those of you in and around, again, it can affect oil as well. Again, Thursday, we've got Eurozone interest rate. We're expected to see movement there. And again, US PPI. So in terms of data, we know we're good Monday, Tuesday. So for now, that's the concern. It's like my trading day to day. Is there data that's going to come along, mess up my position, and take me to a place where I'm crossing fingers, hoping data supports me? That's not trading. I don't advocate doing that, because those are the ones where you see a position that's going quite well, and it's just typical. You know, so often you get a big trendline break just before good numbers, and there's nothing worse. You've been looking at this level for ages, you're going, I really want to get in here. Suddenly the market presents the opportunity to get in, and then you've got high level data just after, and if you're true to yourself, you have to go, well, I can't take it, because much as I want to trade this level, in a very short while, we're flipping a coin on whether it's good or bad. And I don't know if it's going to be good or bad. And if I don't know it's going to be good or bad, but like I say, it's just sod's law that, or just typical that happens. But as frustrating as that is, that's trading, and we just have to get used to that. So let's keep going. So I don't think we got to Friday. Sterling UK GDP, for those of you who are interested, and we got the Michigan in the afternoon. Again, the inflation expectations element of it, and of course consumer sentiment will be privy. So the big things for this week are PPI Thursday, CPI Wednesday, obviously Bank of Canada. We've got some potential action from the ECB. We kind of know that they're looking to hike. Let me just catch up on the chat. Everyone is led to believe Petro's. Doesn't mean you know edge trading charts. No, you absolutely do have edge trading charts. It's just a balance, and the charts allow you when to know when. Sorry, the economic calendar can just give you moments and glimpses of when you should and shouldn't be in the market. Okay, thanks, Leo Lager. Hey, coach. Hey, thank you very much, David Rees. Right, so let's go on. So this is one element of what's going on in the week ahead. So this is the economic calendar. Now, this brings us to the earnings calendar. Now, we are at the tail end of earnings. We're just kind of coming out. We've had all the kind of big major ones. So this week is relatively light. Just Campbell's today. Let's have a look at how all these are trading. JM Schmucker, Oracle, not insignificant. Oracle's the biggest one this week. Look how heavy it's trading. How heavy it traded on Friday with the AI trade. So many of these came under pressure last week. Let's just have a look. We already touched on Broadcom earlier. Down trading. Sorry, we're on 1 minute here. Let's get off. Broadcom trading so heavy, but look, just think, that was the gains from Monday to Wednesday, and then on Wednesday. So really, in the scheme of things, it's not that high. And the same goes. This is what we've got. We can't. The market and the press are so quick to panic on the AI trade, but all they're doing a lot of the time is giving back big gains they've just taken from the market. Again, let's just have a look at Nvidia. Another, actually, while it's there, Intel. Look at the gains. Look at the gains this year. Are we talking about this being a momentous collapse? No, we're not. We've just given back a bit of room. And believe me, the people that were sitting looking at it when it was up here going, I wish I'd got some of that. Wish I'd got some of that. Moves down to here, kind of brings them back to the party. So just bear that in mind. Yeah, market Mario Maker. Exactly. Press are the worst thing. I used to say like press and taxi drivers, because I used to work like a mile and a half from the station. I was always running late in the morning, and I'd get in a taxi. And the minute a taxi driver started speaking to me about the markets, whatever they were talking about, I knew that it was done. So, for example, crypto's a perfect one. Oh, just got into some crypto. Like, right, okay. This I'm almost using taxi drivers and the press as reverse indicators, because our markets, what we do, doesn't meet. Yes, it will meet the pages we all look at. Of course, they're always going to have news on them, but when they take that step and go to headline news on national newspapers, that's when the move's probably just about done. When the tabloid press on a national level is saying markets are going to crash, more often than not, that's the point where the markets have already done what they're going to do, and that's potentially the point where it's almost time to get back into it. That's where everything's, that's at the point of flush, where everything's coming out of it. Your taxi driver got a Lambo from XRP. Well, I hope he's still driving you around. So it's far better than some normal taxi. Look, I'm just giving an example. Cool. I can't remember. But yeah, I think the general consensus is when things shift from being, they come out of the space that we look at and we see them elsewhere. Like I say, that can be the extent of the move. But the point I was going through was, so without question, the AI, the semis, the tech names led the move down. I'm trying to find the video. Oh, there it is. But yeah, I mean, look, we're trading lower, but we've come a long way. Bear in mind, Nvidia sat between 195 and 215 for look, all this period of for what felt like ages. That happened during the meme stocks. I was at Delhi and everyone was talking about buying it. Absolutely right. This is the thing that these types of highlights, they come at all the wrong points, and for me, they're the trigger to pay attention to go, do you know what? Bottom could be in here, top could be in here. Wait, I'm a taxi driver. Look, nothing wrong with being a taxi driver. One of my neighbour across the road is a taxi driver. Plenty, and do you know what? Not a bad thing to do alongside trading. You could pick your moments, and when you go out, you could be at your screen. Nice supplementary job to go along with trading. Dictate your own hours, work around the markets, but have that income just flowing in. Yeah, it may not be the highest in the world, but it covers the core bills, which frees your mind up to trade in a way, to trade knowing part of it's been covered. Anyway, it's not the worst thing to be doing. Right. Let's just have a look. So, but yeah, obviously we keep an eye on some of the tech stocks. They're going to be what everyone's looking at this week. Again, let's just go back and see how that Nasdaq is trading away. Bring it back down into the 1 minute. So just pushing on. Look, it's not going to fly. It's just pushing on. The reason why I like my stop loss levels to be technical. So my stop loss is below this trend line. Again, that's an okay trend line. Again, through this low. So if it does, even if it comes back off, even if it comes below down to here, I'm comfortable because my stop loss is in a good place. It's not just in a monetary place. It's in a good place. Now, Lavoisier, big IPOs will take liquidity from the market. SpaceX and Google cash raise. That's a very good point. And now what Lavoisier is trying to say there is people could withdraw money to be looking at this IPO. Now we get the IPO, I think, is it the valuation comes on, I think the stage 1 is Thursday, but the actual kickoff of it will be on Friday. Now it's expected to be around about SpaceX valuation of around about 1.5 trillion, and I believe they're looking to raise between 50 and 75 billion. So it would be interesting. Look, I'm not a fan of Musk, but you can't not respect his companies. People do. There are more buyers than sellers of what he does. Again, it's just very. It's going to be interesting to see how it goes, especially seeing as we could be. I think a couple of other large Anthropic and OpenAI will come with other IPOs. Now, this is a time I really wish my brother-in-law hadn't retired, because he used to do IPO. He did IPOs for Goldman's. Spent 35 years running one of their equity desks. So no, the most annoying thing was he was very good at summarizing what had happened after it happened to me, but he wouldn't tell me what happened before, because one, that would be illegal. But yeah, he was. But it was interesting to hear his thoughts after the event, just to kind of put the picture together. But unfortunately, retired last year. With plenty of money. So that's what you get for working for Goldman's for 35 years. Right, I saw, Coach, I've worked for large foreign banks for years. During the 2000s, I made most money in a long time when the news was all doom and gloom. Completely, but look, this is the beauty of trading. Bad news isn't, just because the markets crash doesn't mean to say, we have the beauty, we can go long, we can go short. I said before, I'm a pessimist. I love short markets. I love the market going in that way. That down is not necessarily bad. Unless, of course, if your mandate is to buy and hold stocks, then of course it's going to be tougher. But again, the way we deal with that is we use optionality hedging, just to kind of soften any blow to the downside. So again, I can't give you the example. There's a perfect example we did last week, but I'm not allowed to say it. But just like a stock that crashes off, we can have option protection. When the stock crashes off, you can then come back in, sell your protection for a profit. And what you've done is just improved the average on the position you're holding. Yeah, you're still a bit down, but you've caught some of the move through what you're doing. Now, obviously, this is definitely in play on over major events, major earnings. Right, let's have a look today. The survey's in. Bullish on the market 68%, bearish on the market 32%. 274 votes. So let's see. Okay, right. VIX is actually interesting. Yeah, VIX, again, we pushed up. We've just seen a bit of a correction on the 1 minute. VIX pretty much all last week. Let's just get out into something where we can actually see. Pretty much all last week, the VIX was sitting. Oh, sorry, I've gone on to too fast a time frame. Most of last week, yeah, we were between sort of 15 and 16, which was the market showing that the concerns over the Middle East had lessened, and the market believing that we were going to see some kind of meaningful truths. Now, obviously, what's developed over the weekend has brought volatility. Obviously, payrolls has brought that volatility. AI sell-off has brought that volatility. So we have seen the VIX push up a little bit, back down a little bit. Again, just now. Is anyone else having trouble with loading? Just me? Not really sure, Trader Girl. Nobody else mentioned it. I'm not hearing anything in my ear, so perhaps just try giving it a reload. No. Yeah, no, I'm confirmed on the back end now. Everything's good from this side. Okay, but yeah, as I was saying, the developments in the Middle East over the weekend has certainly pushed the VIX up. For those of you who aren't aware, there's a volatility index. So when things turn to shit, the VIX goes up. Let's just have a look on a far more, take it on a 4 hour. So look back at the extremes of this. Again, this goes back to where the kind of yen carry trade unwound and the VIX pushed up to 66. Again, going back to April 25, where we saw that high volatility. Again, this go back just to March. Is this March this year? And again, but just a bit of a spike. So we do have to pay attention. It's not something I trade the VIX, although I do sometimes buy option protection on it. It can be quite useful from that perspective. Just downside protection against our kind of long stock holdings, because you can be pretty sure that if you're holding a long stock profile and you have options where you can buy the VIX quite cheaply, then if stocks come off, they're probably going to come off because the VIX has gone up for some reason or another. So again, that's just a summary there. Okay, let's just go back and have a look. Someone said yes. Now I'm on a 4 hour, so that's pointless. 15 minutes. So ES just starting to push up. Now, I did have a little bit of I plotted this earlier, but I can't really call it a good line of support. Yeah, we've got 1, 2, 3 lows here. I'd certainly rather be long this than short this. Let's take it down onto a minute. We'll start with a 5 minute and then but really, there's nothing clear and obvious jumping out at me to justify buying it other than that line. Let's take it down into a minute. Yeah, we're just edging through a number of highs here. It's not. So again, so we've got number of highs, but we did break below that, but we've come back and tested. Look, I'll be honest, I'd rather be long this than short this. Technically, would I take this? No, it's not quite there. Obviously, as I say, I'd rather in isolation, if this was all I had to trade, I would be trading it. But in terms of the strength of the setup and the NASDAQ, it's kind of pretty much doing the same thing. I'm looking to capture the same move, but technically it's cleaner and it's better for me. So I prefer this type of setup. In terms of giveaways, none this morning, but I can guarantee you Nick and Celine will be back with you tomorrow, and I'll be amazed if they don't fly into the giveaways, and it'll be a very giveaway heavy session. So I don't want to promise the world, but they'll be looking forward to being back. They'll be looking forward to doing these sort of things. So please just bear with us on the no giveaways front today, and the world will be back to normal tomorrow. Right, this market's a sell for sure. Even gold. Look, this is what makes opinions. At this moment in time, I'm not uber bullish. I just think we might see a little bit of a correction today. Again, I think a lot will be pinned on what we see out of the US Trump this afternoon in terms of updates on what's going on. As I said earlier, things have kind of flared up a little bit, but we're at 100 days into this war now. We're starting to see trends develop within it, and when things look bad. When things have started to look bad in this negotiation process, it's when things suddenly quickly get fixed and put together. I'm sorry, I used the word fixed. Repaired is probably a better word. And Trump doesn't want the market tanking. He doesn't want the market tanking. Absolutely not. As I say, the stock markets are doing all right. Yeah, we had a crap day on Friday. Not so great day on Thursday. But broadly, when they're not in a bad place, but the bond market is what he's looking at the moment, and where we are at the moment on the with the 10-year being back above 4.5, it's cause for concern. Right, let's just have a look. Right, let's just kind of. Jonathan Macking, thank you for your time. Nice one, like. No problem. I think it's. Hopefully you guys find it useful. I mean, obviously Celine, Nick, way more entertaining than me. I don't dispute that in any way. But sometimes it's nice just to mix it up with a bit of a different side. I look at things differently. I perhaps look a little bit more deeply at the fundamentals and what drives and moves the market. And again, just interesting to see a more simple trading setup in what I do. Russell Dean Harris, seeing some margin calls, but look, this is an area when stop losses start cascading down. Then we could potentially see that. But let's see how the market reacts after we came down for a reason on Friday. I get that. Did we overextend? That's the key thing. Did the market overextend itself on Friday? That can sometimes happen. Coach Duncan, at the start of my trading, I used trend lines that absolutely destroyed me. Now I no longer use it, but seeing your trend line analysis, and now it helps as an additional confirmation. Exactly that. Even if it's just that extra bit of, even if you're just using it as a small element, so you can use your fibs, your golden pockets, whatever, golden cups, whatever they are, to get in. But even if you're just using them for your in-trade management, again, hopefully this just pushes on, and I can give you an example of how I trail it up. But just to give you an idea, I'd perhaps be looking at, obviously I had my line here. If the market moves on a bit, I could potentially bring this up here just to raise it a little bit higher. So like, everyone's got a place on the thing. Nick and Celine, there'll be a lot of people happy to see them back tomorrow, but perhaps I can pop in for a time being. You can always catch me. I'll actually be doing it later on today. I'm on at the Open of Tradeify TV, not the Open of the Market, the Open of Tradeify TV. It's every Monday, and I just do a bit of a deep. Me and Nick. I get the real Nick, not the Spud, and we talk markets and just look. I'll cover a lot of what I've already covered today, to be honest with you. Just concentrate that into half an hour, and we just look at what's happened, why it happened, why the market moved in that way, what's coming up. So again, but there's always scope for me to pop in on the Monday on the London. London is my home session, my home time zone. So potential jump in, just do a little bit on here. Who knows? Anything could happen. Right. Okay. Do you see oil gap up over the weekend? Yes. Let's just have a look. I did look at this one a little bit earlier. Very good reason. I struggle with gap fills. I really do. Look, I'll first thing from the off, I do not trade oil. I have never traded oil, and I never intend to trade oil. I pay attention to oil, especially at the moment, because oil's driving everything else. Oil is inflation at the moment. So I do pay attention to it. I find it horrible to trade, purely because, and going back to when I was a currency trader, I wouldn't trade the Canadian dollar or the Norwegian kroner, purely because oil influenced those currencies too much. The reason I don't like it is because with, say, a currency or a country, the central bank has a responsibility for the safekeeping and stability of that factor. Now, the problem with oil is we have so many people can influence the price. Russia can influence the price, Iran can influence the price, India can influence the price, and obviously all the Saudis. Again, it's not clean trading. It can be changed, it can be manipulated to suit one country's need or want. And groups of countries can get together and drive the price to where they want. Like I say, with a currency or an indice of a country, that can be controlled. The central bank's there to try and manage that, and like I say, their job is stability, not personal gain. It's stability. This is why central banking is taken out of government, because Trump's always going to want to give people what they want when we're heading towards an election. The central bank's there to stop him doing that. And I'm not talking just Trump. We had some staggering examples of this from the UK before the UK moved to an independent central bank. Right. Right, okay. Let's just have a look at what's going on. So, yeah, we buy house UK. Again, you underpin my thoughts on oil. Oil is something that exists and is functional and feeds into other things, but as a trading vehicle. Now, I started this by saying I struggle with gaps. What I can't dispute is that they fill. I can't dispute they fill a lot. But the one thing I have to question myself is, do they always fill? No, they don't. Do I know they're going to fill? Definitely don't. So what I can't do is walk in and go, massive gap, right, it's gapped up, I have to short because the gap has to fill. Can't do that. I just can't do it. I used to work with a guy who used to just do it all the time, and it drove me crazy. And I can tell you for fact, he didn't make money out of doing it, and it drove me mad, him doing it all the time. It was just like, oh, there's a gap. Well, we're going lower today because we've gapped up. Well, we've gapped up for a good reason. We've gapped up because Middle East tensions are increasing. We've gapped up because we're seemingly further away from negotiation than we were. That doesn't mean to say the gap has to fill. Now, for me, when the gap comes down and fills perfectly, yes, I feel an idiot. I unquestionably feel an idiot. But I will not just blindly sell because we've got a gap and it has to fill. I just cannot do it. Now, again, Tradeify, what do you think you better sell? Right, let's just answer Jose Carlos's question. Now, for me, I've got that line there. This is my trigger. This is my entry. Again, I didn't plot this line until we'd had that blip. The entry is just not as clean. So for me, that isn't as clean. Whereas over here, that entry for me was beautifully clean. Above a previous high as well, because we hadn't got through this high before we broke here. So for me, that was just a better entry. So if we just quickly go back again, this is okay. This is just okay. Just okay. And bear in mind, when I came to this chart, we'd already had that blip. So that made it a little bit ugly for me. Had I seen it before that blip through here, then I might have been more excited by it. But I'll being honest, I wasn't. So I'm not. I'm just not as enamored by the ES as I am of this breaking. So I'm more happy with this. For me, the stop loss is in a better place. If we go back to where the ES, my stop loss would have just gone here. It's all right. It's just all right. That's it. Or I could have had it here. For me, the quality of the entry, the quality of the stop loss was not at the same level as the setup in the NQ. So for me, the stop loss is in a great place. Not only that, it's in a great place because it's below that low. Also, we've got the support of this raising trend line. My dream scenario is the market just keeps on going up. This trend line stays in place, and I can just use this trend line to bring my stop as we go on and on until I hit my target. So, but yeah, it would be great to see a bit more movement up, because I'd love to show you how I trade my stop loss. Because for me, risk as a trader, obviously the technical brilliance of calling the lines, having the amazing entries, that's one part of it. But it's your ability to manage a trade is so key. It's so important. That's what separates an exceptional trader from a poor trader, is their ability to hold a position, know when to trail the stop loss, know when to take a bit of money. Sorry, I think someone mentioned earlier about partial take profits. I don't do that. Now, what I tend to do, I'm far more active in trailing my stop loss up. So, and the person who asked that question remembered brilliantly that I said that I very rarely hit my take profits, because I do very rarely hit my take profits, because as the position moves up and up and up, bear in mind, I'm not looking for one-to-ones. If I'm getting out early and not hitting take profits and I was trading one-to-ones, I'd be pretty crap. That would be bad. But when you're looking for a higher 3 to 5 risk reward ratio, even if I get halfway towards my profit, I've locked in 1.5 to 2.5 to 1. That's not a bad place to be. So it's just you're either one or you're the other. You're either the person, like I say, if you're aiming for one-to-ones and you're not hitting your targets, that's a problem. But because I'm looking for more, I want more out of my trades, I'm a little bit greedier. Now, this greed that I have of having to achieve a 3 to 1 minimum, it's limiting. I get far less opportunities than someone who's looking for a 1-to-1. I have to be prepared to sit out of the market a lot more than someone who's trading a 1-to-1, because 1-to-1s are everywhere. No, it's not everywhere. Sorry, that's a bit flippant. I didn't mean that. 1-to-1s are more abundant. They're 3 to 1 and aboves. They're few and far between. So therefore, again, I have to make. But as I was saying, I rarely hit my take profits. The only time I hit my take profits are invariably when I'm asleep or when I'm not at my desk. And that's because let's just say this has come up to here. Now, if we're all the way up here, if I'm that close to my take profit, at that point, once I get more than 50% towards my target, probably 60% towards my target, I really start bringing my take profit in, because I never want to give back profit that I've made. I would have said this last week, but for me, one of the most frustrating things when I had a lot of guys working for me was when I could live with people being wrong and losing money, but what I couldn't live with was people having made lots of money and giving it all back. For me, that's unforgivable. When you've seen someone just be that close to their take profit, you walk away from the desk knowing they're just that close to take profit, come back from a meeting or a business lunch, you look at their P&L and go, you're down. For me, that's the worst kind of trading. That's just being an absolute dick for a tick and just looking to be perfect and to hit your exact target because you're right and you called the target and that's what you wanted, and you've let it slide all the way against it. That makes me sick to my stomach seeing that kind of thing, and money disappear, hard earned and well entered, good entry, and just the desire to be perfect killing a whole trade. Right, do we have an impulsive candle when it breaks the trend line? I trade on I use basically I don't care about the candles when it breaks. I just want the market to be through my level. So for example, I trade on when it breaks through the line, I have a set number of pips. So for me in the NASDAQ, around about 7-8 pips through my level. No, I've already got a trend line breaking. I've already got a previous high breaking. I personally don't need to see a candle complete through a line before I get into it. I just use price. Once the price gets a certain amount through the level, that's my trigger and I'm in. Now, the downside of that, of course, is when we just see a wick through, back down, and I feel a complete clown. But on balance, when I've used time versus price, I find that price has worked better for me. Again, that's just my personal opinion. If for those of you do it the other way, if that works for you, brilliant. But personally, I find, because what I cannot stand is when we see, and we know what it's like when we see that aggressive wick, and suddenly we're so far into the move, and I'm thinking, is it still worth it? Now, there's upsides and downsides to both. Obviously, you wait for the candle to complete. You can be way into the move before you're getting your trigger to buy or sell. But obviously, the downside to the way I do it is just that horrible wick, the candle coming back within the line, and yeah, you feel a clown. But look, both ways work. I've worked with people sat next to me. We're trading the same thing, looking at the same line breaking, and we're in at completely different points. And sometimes he wins, sometimes I do. Just find the one that works for you. But that's the way I do it. Yeah, Apri, exactly. Just underlining what I'm saying there. But nobody feels more stupid than when they have and protect your profits with your life. And I'm not just talking about in the day, in the trade, in the week, in the month. Protect your P&L. Again, these are all really, if we want to make it as a trader, we have to be thinking about the slightly bigger picture of what we're doing, protecting our account. That's what I have to do on a daily basis. It's about protecting the account. Friday, great case in point, we hold a lot of stocks. It's about, do we have protection in? Are we being nimble? Are we, again, how are we protecting our downside? Because downside has to come when you're holding things for a long period. So when trading, I use very simple technical analysis, so just a chart and news. And I do a lot of analysis, so I'm spending a lot of time looking. I read a huge amount. Again, I appreciate, so guys, for those of you who are new to trading, getting your head around fundamentals can be pretty confusing. So come in, and Nick and Celine will talk about the markets. Listen to those bits. It's really important to, if we've had a big move like Friday, over the weekend, spend a bit of time reading. Okay, I know it was because payrolls came in hotter than what we were expecting, but so that's the fact. Yes, we got a bigger payrolls number. Markets came down. Why? Spend a little bit of time reading it. Look at like Reuters, Bloomberg, CNBC, all of these places. There's infinite different places to read about the markets. but just start pushing, just start reading that little bit more, and just to build and enhance your fundamental knowledge. From a fellow Duncan, I found another Duncan. There's not many of us about. There's really not many. So I actually, my son's middle name's Duncan. I did that to him because I didn't want to call him Duncan, but I wanted to keep the Duncan name going. So right, trading markets, chat disconnected. We're nothing this end, so I will keep plodding on. Oh yeah, no, sorry, I just looked at myself on the screen and I'd gone still. Cool. DMC, yeah, right, okay. No, DMC, I'm glad you've enjoyed it. Good to have Duncan. Yep, okay, so, right, we do the same. Scottish family tradition, it seems. It is indeed a Scottish family tradition. So, I've, even though my son's born in England, he's Scottish. And he sees himself as Scottish, which is great. Which means he's going to have a really poor World Cup. So, but hope you guys are all excited for the World Cup starting. Obviously, this isn't a US session. I'm guessing we've got a significant amount of people, in Europe as well. So hopefully your countries are there and you're all optimistic on what's going on. I'm excited for the World Cup. I'm a massive football fan, huge football fan, as you can probably see from the stuff around me. But I'm so disappointed with the time zone. It's killing me. Scotland are based in Boston, and our games kick off at 11 p.m. UK time, 3 a.m. Really disappointed. Now, obviously, I'll get up and watch that, but no, I can't get my son up. He's got college the next day, but after all the games, he's 17. But yeah, enough of the World Cup. Italy. Do you know what? I think the World Cup would be worse without Italy. I wish they were there. Obviously, you earn your right to be. I see, read in the picture, not Arsenal, Aberdeen. Then now, I'm guessing there's a few people who haven't even heard of Aberdeen, but we want to surprise the world and beat Real Madrid to win the European Cup. So I'm going to cling on to that for as long as I live. Mario Market Makers, I think people need to learn two things before trying to make money: risk management and position sizing. Absolutely. The very, very last thing I do, position sizing is something I've not actually covered, and I'm so glad you brought up that point. So I have my entry point. So let's, for example, this trade, I have my entry point, I have my exit point, I have my target. The very last thing, the last piece of work I do before I end every trade is calculate how big a position I can have. That's the last thing. So obviously, again, it's all relative, because I have an amount I am prepared to risk per day, per week, per trade, and my per day risk affords me having 3 positions. So my risk per trade is based on me having 3 positions. Okay, now this is just what suits me for day trading. So basically, as you know, and I've said it millions of times, I have a minimum risk reward of 3-to-1. If I get 3 trades, I think I'm getting one of them right. I'm fairly confident I'm getting one of them right. Hopefully, if I can get 2 and 3 right, then I'm doing a lot better. I'm doing significantly well. But again, everyone gets so het up on, first thing new traders want to do is just make loads of money. Okay. Second thing, they want to have that perfect entry point, why am I getting in the market? The power of the stop loss is so often missed. The power of understanding what you're going to risk per trade, what you're looking at targeting, how you're going to protect your money. Those are for me, that's the edge of trading, is being in control of your risk, with not just on a day basis or trade basis, but in the trade, and having a plan on what you're going to do. Now, I will have a plan. I don't have a plan yet. Now, if the market starts to come up, again, if we break through these levels, these previous lows here, that could be my trigger for my first trail. And that first trail will likely go, obviously, I can't make the plan yet because anything could happen between now and when we break there. But my plan, if let's just say we got a straight line now, my plan would be to take it up to here. I wish that thing would move. I can't. But sorry, let's just get rid of it. But my plan would be to take this up to, I will look into how to get rid of these. Anyway, take it up to below these lows. Again, that locks in a small profit. It takes me up. I'm using this trend line, these lows. I'm locking in a fraction of profit. I don't just want that profit. If I got it, I'll be honest, I'd be pretty pissed off. But it's a process, and it's a management of risk process. How might your trade management be different, knowing that your trade can only remain open for the day? Well, look, this is different because, yeah, I appreciate that's not something I do, and I will hold trades until they go out. Now, obviously, if you're holding it for the day, for example, this would have to come right in. But do you know what? This can come right in, because what I was looking for was bloody aggressive. This can come right down. Sorry, just have to do something for the day job. Sorry, one second. Right. Yes, sorry. DAX mega dump starting. So let's have a look. Sorry, I should have done this. Let's have a quick look at how Europe is opening up. Right. Sorry, I just had to jump in and do a bit of work. The good news is I was meant to have a call at 9:30, which is just pushed back. So I was going to be jumping out just before 9:30, but I don't have to do that anymore. So that's good. Right, let's have a look at DAX on a 1 minute. Oh, that's been a bit of an aggressive one there, hasn't it? So let's just take this out and have a look at it in the bigger picture, like we would on anything else. I'm quickly going to plot a line here. Oh, that's the wrong thing, wasn't it? I don't know if this is relevant, but I'm going to put it on just in case. No, we are actually coming through that. Yeah, DAX is the other thing to bear in mind. Obviously, the DAX was going to have to open up lower, because bear in mind the extent of the move in US markets on Friday happened after the DAX close. So it won't be alien. Let's just jump on and have a look at the FTSE. Which one should we look at? Let's have a look at this one. FTSE. Oh, sorry, this is on 1 hour. Take it back on 5 seconds. What am I doing? I can't even understand how someone could trade on a 5-second chart. FTSE not doing a great deal. Let's have a look. How's the CAC, French CAC, going? So really, it's just the DAX. So from the European Opens, it's the DAX that's suffered the heaviest. Let's just get rid of that line because it was shit. It's a really important thing to do, guys. When you put a shit line on the chart and say, look, I'm not going to use that, get rid of it. Because it could be tomorrow you come to it and go, shit, I put that line on, it must be meaningful. So do always delete your crap lines. I put a lot of crap lines in the chart, so I'm forever deleting them off. And confusing myself when I go in and go, oh, that must be good, I've left it on my chart. And it turns out it actually wasn't. Yeah, troops, really good point. I went over that at the start. The Kospi is such a kind of hub of AI. We've got the Hynex, we've got Samsung, some major tech companies in there. Obviously, Hynex actually got a bit of a boost from the link up with Nvidia, which made them less bad in today's market. But FTSE MIB, I've never traded the FTSE MIB. You're from Milan, so the volume, yeah, Milan's not the best. What you trade in the fund? So in the fund, I trade. We can trade actually pretty much whatever we want apart from crypto. But we trade a lot of single stocks, a bit of indices, but the major indices we just use as hedging against our stock holding. Trade a lot of foreign exchange, gold, South Korean and Asian stocks we do a lot of as well, and like I said, currencies as well. Right, okay, let's just have a look. Now, guys, obviously we're coming up to the end of this session. So before we go, things we've learned, earnings, just Campbell's today, that we will get that in the session. Not the biggest. I'm not going to say it's not going to be the biggest influence. For me, Oracle's the biggest one we see this week. From a data standpoint, nothing really of note today. All eyes will be on what this man says. Again, he's come down hard in Netanyahu. He actually came down hard in Netanyahu before they bombed central and western Iran. So again, we'll see with that. Now, before we go, and look, guys, any last questions? I'm not rushing for a 9:30 meeting now, so I can do another 5 minutes or go. Market Maker Mario, really good. Really good to catch up with you all. Some really good input from everyone. Now, quick, before I go back to the Grand Cup, those of you who are late to join us, Spud snuck through with a heavy negative day by being fractionally less bad than his opponent, but he's got a tall order for today. He's got Afro Miyagi is already trading, has already banked $6,000, well, best part of $6,000. Spud may be in a position now, because bear in mind this is not showing unrealized positions. But look, we're down at the business end. Let's just have a quick look at rewards for what we're getting here. So all these guys bagged 40 grand just by being here. Oh no, hold on a second, I'm talking crap. Third and fourth, where are we? Let me just go back to Grand Cup. Yeah, sorry, I am right. I doubted myself. All these guys have bagged this, but look, the difference. Just if you progress today, you're guaranteeing 80 grand. Of course, there is the caveat, and it's a big caveat. It's in red here. If an outlaw wins the cup, everyone else's rewards are cut in half. That's quite harsh. It's harsh, but look, it's competition. That's what it's there for. So therefore, let's just will against Nick. But look, he's got a tall order. As I say, it's by no means done and dusted. He could be in a position that's made more than that already. Who knows? But I think the next update comes around about the US Open, sort of midday for those guys in Europe. But right, before we go, so how did Spud go through? I will show you. It is incredible. Bracket, there we go. I'm trying to remember how to do this. He got through in the most, if he'd have been on stream when this was found out, like I said to some of the others earlier, I saw it play out in the Slack where he said, look guys, sorry, I had a crap day. Thank you for all your support through this, but I've had a really bad day. To then realizing that he had just managed to lose 500 less than his opponent. Unbelievable. So that is how he got through. But look, the man's got a lot of work to do. They've all got a lot of work to do. But look, again, take my hats off to anyone who's at this point. Anyone who's here is a good trader and has done so by working really hard and deserving it. Before we go, let's just have a quick look back at my theoretical NASDAQ position. I'm on a 5, let's take it onto a 1. So, right, maybe what I'll do, I'll check back in on this. I've got to go and do some real work now. But I'll be back on the stream at 1:30 UK time, just to go through the markets with Nick. Perhaps if anything significantly changed in this, I'll just get him to, or I'll perhaps mention it on that stream just to see how I would trail it up or what have you. Okay, guys. Well, I wish you all a very good week ahead. It's been great chatting on here. Some really good engagement on here today. Thank you very much. And I'm sure I'll see you all at some point in the future. I'm always on 1:30 on a Monday, UK time. I'm always on Coach's Hour at New York midday. So I think that's 11:30, 12:30 US time on a Wednesday. Me and Coach Ryan do a bit of a education segment. So we'll always kind of pick one thing to talk through, but it's kind of ask us anything, any coaching, psychological things you want to go through with us. You've got quite good. Ryan's relatively new to trading. I think it's like 4 or 5 years he's been trading, but he's excellent. Really take my hat off to how his technical know-how. And you've got the age and grey hair of me talking a bit more generally and kind of economically. Okay, guys. Well, drops good. I'll avoid all those hours. Fair enough. Each to their own. Okay, guys. Well, have a good one. Thank you very much.